I'm Dan Fitzpatrick at StockMarketMentor.com. Look, if you're a hardcore trader, you probably got CNBC on all day. You watch the opening bell, you watch Power Lunch, you watch the closing bell, Fast Money, Mad Money, you kind of see it all. Okay, during the course of the day, you'll see all kinds of stocks covered, all kinds of news flashes, new stocks, earnings, downgrades, upgrades, stuff like that. Okay, a lot of stocks. I'm here to talk about the 3 stocks that I saw on TV and tell you what you didn't hear on TV, and let's see if we can make some money. Okay, first up today is SolarCity. Where's the little blue arrow here? Because we always have the blue arrow right where the current price is. Well, let's zoom down. There it is. What happened? Okay, the company actually reported a profit, which was good. Problem is they had really poor guidance. The market, traders, you and me, we don't really care what kind of money a company made over the last quarter. That money's already in the coffers. It's already baked into the price of the stock. What we really care about is, like, what are our expectations? What are the market's expectations? And what are the company's expectations for how well it's going to do going forwards? So when a company guides down, the stock is going to essentially say, traders are going to say, well, the multiple that I was willing to pay based on these great earnings, that's not the multiple I'm going to pay next quarter or the quarter after that, because the company's saying we ain't going to be doing so well. So the stock trades down, like really down. Think LinkedIn. And by the way, buying this first bounce on LinkedIn, I'm digressing here, buying the first bounce here. Oh, it's a nice up day. Great. This is the low. That doesn't work. Okay, when there's no immediate bounce on the stock, and there wasn't yesterday, you don't want to sit around and wait for everybody to realize that LinkedIn was supposed to bounce. Oh, but the stock took how much of a haircut? Oh my gosh, it's down by 43%. Okay, well that's got to be enough. That's got to be oversold. Well, not really. Now it's down over almost 50%. My point is this. When you see SolarCity trading tomorrow, for a trade, it might be worth buying the stock just because it's fallen so far outside these Bollinger Bands. From a statistical standpoint, these bands either got to really stretch down a lot or the stock maybe will bounce a little bit. But I'm telling you, this is a stock that's kind of been in a downtrend for a while. For the same reason that Tesla's falling, which I'll get to in a second, you got to think about this too. Solar energy, with oil so cheap, from just a thematic standpoint, from for investors, they're not really going to say, "Wow, solar is the thing of the future." And I get the whole thing about global warming, or now we call it climate change, because the Earth really isn't warming, but we still want the global tax. I get all that, but with oil so low, frankly, you're just not going to see that much of a move into solar. So just keep that in mind. If you're buying the stock tomorrow, seriously, it's for a trade. It's only for a trade. Now, okay, Tesla, they report earnings after the bell tomorrow. And here's the thing with that. They got a couple things happening here. First of all, there was a price downgrade after hours. It was like from 180, I think it might have been Barclays, but I don't really remember, and I don't really care which one it was. I don't care what any particular analyst thinks about a stock, unless it's Dan Niles talking about semiconductors, but that was last century. They downgraded like from a 180 price target to a 165. All right, well, the stock's down at 150 now, so it better turn around pretty quick. But here's the thing with Tesla. There's a couple things going against it. First, that X, that Model X, that's the gull wing. I'm actually moving my arms right now, but you can't see. The gull wing or falcon wing, whatever you want to call it, they're having a problem like making those be gull wing or falcon wings where they actually open. So that's a problem, because everybody can want the car, but they want it to work right. If investors don't think that it's that's going to be a big deal. So frankly, it's not just what the earnings number is going to be tomorrow that's the most important. It's going to be what Elon Musk has to say about their assembly line, about their ability to get that thing to work. That's a big deal, and that's part of the reason I mean, why this stock? This looks like a Thelma and Louise, like they got in a Tesla P85 and are flying off a cliff. This thing can go a lot lower. It has always been an expensive stock. It's what Jim Cramer calls a cult stock. You know, you're a Teslonian or you're not. It's just like in the old days, Apple. People just believed in Apple. It didn't matter what it did. Now it's Tesla, or at least it was Tesla. So don't look to just buy this on the dip. Wait until, you know, wait and see what earnings are going to be tomorrow. See how the stock reacts to those earnings, and then you can make a little trade. Frankly, just spitballing here, I'm tempted to buy a few puts on this, even though I know they're super expensive. But when I look at this chart, I hear about issues with their production line, and I hear about $20, $25, maybe $30 oil. Suddenly, electric cars, for most people, aren't really the thing. I love my Tesla, but I didn't get it because I didn't want to put gas in the tank. That was just a side benefit. Okay, and then the last one we're going to look at here today is Disney. They reported earnings after the bell. You can see on the weekly chart what's happening. Okay, the stock is now down to a new 52-week low. I mean, it hasn't seen this level since 2014. So we'll look at the daily chart. It's not too bad here. Maybe $88 is going to hold. This is what I would tell you about Disney. This is actually a pretty easy analysis to go through. Okay, it's in a downtrend. That's it. Buying these when the stock is close enough to the support line, you know, has been profitable to buy. Okay, great. But not by much, because the stock just essentially is like drifted sideways. You know, you get a nice move there. But generally speaking, you're buying, and I'm just approximating here. The stock is kind of drifting sideways. Maybe you make a little money. So here the stock is down. Once again, it's right down at this downtrending support line. Gun to head, I would probably buy some stock tomorrow at around 88 bucks, and I'd probably sell it at 89 or 90. The stock is in a downtrend, and you have to assume that the downtrend is intact up until the time that it's not. And right now the downtrend is still intact. If you're selling at the open, you'll be selling with everybody else, because that's what happens. I would be looking to buy the stock only, and here's really the trade, only if the stock is above the opening print, say 2, 3, or 4 minutes in. If it's above the opening print, then you can buy the stock, and only then for a quick trade, because again, the trend is down. You can see it. Okay, that's it for these 3 stocks I saw on TV. I'm Dan Fitzpatrick at Stock Market Mentor. Hope you'll check out my website. The first 30 days of membership is on me.